And we have a caller. It's Thanksgiving for everyone, folks. We got Mr. Z from Philly calling in. John, how are you?
Hey, Larry, good morning to you. Happy Thanksgiving to you and your client out there in Tucson. Tell us, are you going to get snow on top Lemon Mountain this weekend?
Well, if we were here, no, it's very dry out in the Pueblo this time of the year. But starting in January, we'll get some rain, and then the snow comes in, and there's actually skiing up there. But that's neither here nor there. I want a question that I wanted to ask you, John, before you ask a question about the natural gas. You think that we're going to go a lot higher than 490?
Yes, I speculate that, and that is. Understand this, that is contingent upon Mother Nature. Mm-hmm. And it's contingent upon Mother Nature giving the United States below average temperatures in through January 1st, February 1st. Now, we've started off that way the past 2 weeks. Be very clear just on Mother Nature and temperatures and winter heating demand. Thus, we're just at the start of heating demand. And yes, temperatures have been colder than average the past 10 days. That's true. Mm-hmm. But I've learned, from experience, that past 10 days does not tell us that much about the next 60, 70 days. But I'll share this. If in fact, United States average temperatures the next 70 days, if they're below average, causing heating demand using natural gas to be above average, if that's the case, there'll be spot shortages on account of inventories being so dramatically under average. Mm-hmm. And that doesn't mean people will be freezing. But what it does mean is they'll be buying by utilities of nat gas on a wholesale basis, irregardless of price. In other words, mm-hmm. just get me anything I can. And utilities will do that if, in fact, supplies are running low. And what physically is happening there is price gets high enough, then buyers who have the capability to switch will say, hey, that's fine. If nat gas futures are at $5 or $6 an MCF, I can switch my, say, power generation to from natural gas back to coal temporarily. Or if I'm an industrial user and maybe I had 3 weeks of maintenance on my plants scheduled 3 months hence, I can quickly switch that shutdown to present and sell my nat gas that I have to that utility up in the Northeast or the Midwest if they're willing to pay $5 or $6. So what I'm sharing with you is if price is below average, if temperatures on a persistent basis next 70 days, the spot price of natural gas can go to truly unthinkable levels. Mm-hmm. And that is not a forecast, that is just the possibilities.
Mm-hmm. Yeah, I remember 1 year into delivery, it dropped $12,000 in 1 day many, many years ago. John, what's your feeling here on the Treasury bonds? It looks like we completed an ABC up here. Do you have any feelings on that?
Yeah, well, in fact, I just shorted in the past 30 minutes, and that's what I'm calling about. I wanted to ask you, the December T-bond futures having gotten up to 140 and 9/32 yesterday and dipped a little bit. If in fact the rally extends, past 140 and 1/2, can you show us your charts that will give us some handle on where it could go if it does surpass 140 and 1/2?
Well, if it gets above 140, we certainly could get it higher. What I'll do here is I will post the chart of the weekly, which is something that I look at each week just to see where things could go. And if you take a look at this, I'll post it in the den so everybody can see us. You'll be seeing that we could easily get to 42.22, 143 if we clear that 140 level substantially. But right now, we're in a small ABCD structure over the last 4 or 5 weeks, and it's been a very, very meager rally, which is a little bit threatening, because remember what happened to crude oil when we had these really tiny rallies that went nowhere for 3 to 5 days, and once it starts to break, it can get pretty nasty. So that's also that possibility. The key level for the upside, if it gets above 143, Walter and the old Burro must get out of the Pueblo, because this thing could go, I guess it could rally to 154 possibly on some type of a, flight to quality or whatever they call it. I don't know. We'll see.
Thanks for sharing that, Larry. I'm looking at that weekly chart in the Tiger's Den. On that weekly, I'm just scanning it quickly. Is the possibility of 143, is that merely coming from that being a target whereby the rally from 136.5 would equal a rally that you've seen in the past? I see you do that sort of thing a lot. Is that where that 143 is coming from, or is that something else?
Yeah. No, that's exactly right, John. What that is, it is basically a 61% retracement off the previous weekly high, and it's also an equal retracement. So there's two things there that would tell us that that would be the very last resistance would be at that 143 and change level.
Very good. I appreciate that, Larry. I'll just share something I'm focused on in regard to that T-bond contract. The 140 to 141, I know that's not that precise, but that general area is an area that I'm guessing stops the bounce. And the reason that is because somewhere in that range, 140 to 141 on the T-bond futures contract, that equates to a yield of 3.25, 3.25 on the cash 30-year bond, and I've shown the weekly chart in the past where that 3.25 level had been resistance and tested like 6 times in the past 2-3 years, and I'm guessing at now that the yield on the 30-year U.S. Treasury cash bond has gone well above that. Now coming back to test, that 3.25 yield will now be a floor on the yield, and that, as I say, equates to roughly 140 to 141, somewhere in there on the T-bond futures.
That's exactly what I'm looking at. I think that's pretty much it. Hey, thanks for calling in, and a happy Thanksgiving to you and your family, my friend.
You as well. Look forward to listening to Norm.
Okay, thank you.